Well, welcome back to the channel. Ladies and gentlemen, today we're going to be talking about Olympus DAO. Is Olympus DAO sustainable? Now, this is a little bit of a tricky question because some people, when they ask, is Olympus DAO sustainable? They may be asking, is the price sustainable? Is the APY sustainable? Is the wealth creation that early investors received, is that sustainable? We're going to look at that in this video. I wanted to make this video because my last video I talked about I sold my own tokens. Now that was intended to be a short to medium term sale. I planned to buy back in, but a lot of people didn't understand why I would sell my tokens. It was interesting to see some of the comments on that video. I'll link it above so you can watch it yourself. You can read through some of the comments. But the bottom line is it was clear that so many people who are invested in this project don't truly understand how it works. And that's unfortunate because what's happening is some of the whales are starting to dump their own tokens, and I can show you some proof of this, or at least some circumstantial proof of this, and people don't understand that they could be getting tokens dumped on them. I want to break down everything that's going on and hopefully create some clarity by addressing the very simple fact, is Olympus DAO sustainable? So we're going to look at three things. We're going to look at, is the price sustainable? Is the APY sustainable? Is the overall project sustainable? Is the price sustainable? Right now, the price is selling at $605 per ohm. When I got out about 3 weeks ago, we were sitting at almost $1,000 per ohm. So far, that was a good move for me. But some people say, yes, but you're forgetting about the compounding. Compounding outruns the decrease in the price, meaning the APY. If you hold it long enough, the APY catches up. That could happen, but there is no guarantee that can happen. And let's just watch their own video.
So what is Olympus DAO? How does it work? And how is it able to produce such high yield returns? First, let's start by explaining its place in decentralized finance, or DeFi. Cryptocurrency, especially DeFi, is quickly becoming a powerful digital economy. Stablecoins are cryptocurrencies that are pegged or directly tied to a stable currency such as the US dollar at a 1-to-1 ratio. They currently dominate the crypto marketplace, but because they are pegged to the US dollar, they are still vulnerable to the inflationary policies of the Federal Reserve. Recently, there's been a wave of algorithmic stablecoins seeking to emulate the dollar peg with less than a 1-to-1 ratio backing. Olympus decided to take this idea one step further. What if we could achieve stability while still maintaining purchasing power by using a floating market-driven price?
Okay, this is important. The goal is to achieve stability while maintaining purchasing power. I hope you call that, because a lot of people are looking at this project like it's some sort of a moonshot. That would have been true in the beginning. In the beginning, when the price was going up, that definitely would have been correct. Imagine getting 7,000, 10,000, 100,000% APY in the early days and price was going up. That was a significant win for the earliest investors. But now that price has stabilized and started moving down, it's important to understand why that's happening. I'll cover in this video and here in a minute. And it's also important to understand that is what the protocol is designed to do. The protocol is designed to drive price down. Why? Because the project is trying to just be a cryptocurrency asset that maintains its purchasing power. Let's listen to that one more time right here.
What if we could achieve stability while still maintaining purchasing power by using
Achieve stability and just maintain purchasing power. If you have $100 today and you go to the grocery store, many of us have seen the prices at the grocery store go up. That means those dollars will not buy as much meat as those same $100 would have bought last year this time. Olympus DAO is trying to do something that is going to be revolutionary if they can pull this off, and I'm optimistic they can. Essentially, your $100 will always be able to buy what $100 can buy. You're not going to lose purchasing power, or in this case, your 100 ohm could always buy what your 100 ohm could have bought last year. Now that's not true right now because it's important to understand that this project goes through several phases. The first phase is really about adoption, getting people to use it. That's what that high APY was all about. A lot of people jumped in. The APY was really high. They were earning a lot of interest, and many of them were making a lot of money early on. Now, if you're playing the game, if you think that the price is going to stay at $600, it's not. It's going to trend down. That is a 100% guarantee. The only question you have to ask yourself is, will the APY keep up with the price depreciation? The answer to that question I'll get to a little bit later in the video, but I want to prove to you right now that the price will continue to drop. That's the first truth that you have to understand. It has to drop. It is supposed to drop. That is what the protocol is designed for, and I'll prove it to you right here.
A floating market-driven price. So what is Olympus DAO? A reserve currency protocol based on the Ohm token. It aims to become a crypto-native stable currency. It will accomplish this the same way central banks manage their currencies using reserve assets. But Olympus DAO manages Ohm using crypto reserve assets. But contrary to central banks, where decisions are made by a select few, all changes to the Olympus protocol are voted on by the community of Ohm holders through the DAO. So how does it work?
By the way, this whole part right here, I think is extraordinarily revolutionary. I mean, if we see a cryptocurrency eventually become the main currency of probably the world, and it's a decentralized cryptocurrency, I could see some mechanism like this. I'm not saying it could be Olympus, but those of us that are in Olympus now, one day may say, hey, this is very similar to what Olympus DAO did. Or we may see Olympus DAO actually doing that in the world's best case scenario. Make no mistake, what they're trying to accomplish is extraordinary, but what they're trying to accomplish is not the same thing that you hear a lot of people talking about when they're investing in Olympus DAO.
The Olympus protocol uses its treasury to back all outstanding Ohm tokens.
Okay, this is the part that you want to pay careful attention to.
Currently, each Ohm is backed by the stablecoin DAI, but Olympus is already securing new partnerships to add additional cryptocurrencies to the treasury. The protocol functions to stabilize Ohm's value. When Ohm trades at a value above its backed assets, the Ohm protocol mints and sells new Ohm.
The protocol mints and sells new Ohm. Right now, it's important to understand that's when it's trading above its backed asset value. The backed asset value is 1 Ohm per 1 DAI or $1, one stable dollar worth of crypto. Every DAI is backed by $1 of crypto, LUSD or BUSD DAI tokens. So every time the price is trading above $1, right now price is at $600, then we're going to see new Ohm minted. Those Ohm go to the stakers.
Increasing supply. When Ohm trades below its backed asset, the Ohm protocol buys back and burns Ohm, decreasing supply.
Okay, that's something people are not aware of. If price drops all the way below $1, they have this risk-free value of treasury assets right here backing it. They can use these assets to buy back Ohm and burn those tokens. That's important for you to understand. That's what the protocol is designed to do. The protocol is designed, this part right here,
increasing supply.
The reason that you see that you get more Ohm tokens during every epoch is to increase supply. Because with an increased supply, ultimately the whales start selling. You don't make money until you can finally sell and pocket some of that money. With Ohm, you can stake it and always sell a portion of it. But if you're a whale and you've been in this project from the beginning, at some point, more and more whales start selling. There is a time when people start selling. And if you ever have more people selling than you have staking, price goes down. We are already at that point. You can look right here, total value deposited. It's not growing. It's not growing. The reason it's not growing is because there's not more money coming into the ecosystem. So people are starting to sell. Now, is it possible we could see some more growth? I think we will eventually. But the supply will be very different. The price of Ohm may be very different as well. So it's important that you understand that. Right here, the market value of treasury assets, you can see that that's leveled off and went down a little bit with the recent market dip that we had. You can see the risk-free value assets are leveling off here. It's because it's the whole protocol is not currently growing. So you're going to have people, if the same 10,000 people are in the protocol, and they're all getting Olympus tokens every few hours. More Olympus every 8 hours. More Olympus, more Olympus, more Olympus. The biggest whales are going to start taking profit sooner or later. They're going to start selling. If more people are not coming in to buy those tokens to stake, they're going to sell. Now, what makes this very different is everything's going to be backed by at least $1 in value, in crypto value. That is the design of the project.
When Ohm trades below its backed asset, the Ohm protocol buys back and burns Ohm, decreasing supply. This allows the Ohm token to achieve a stable floating value while never falling below the value of its backed assets.
Again, the backed asset is about $1 per Ohm token.
Ohm also expands its treasury through bonds. Bonds are sold by the protocol for different assets.
The question is, will the Ohm price stay at, the first thing, will the Ohm price stay at $600 per token? No, the protocol is designed to drive the price down. So when you see, and I made the same mistake early on, I'm like, wow, $600. If it just stays at $600 and you divide that and you multiply that by 7,000% APY, well, it doesn't really matter. I mean, that's going to be some crazy, crazy number in the long run. But that doesn't work because the price is going down. So then what people will do is they'll say, well, even if the price cuts in half, or even if it goes to 10%, well, 10% is still $60. Keep in mind, ultimately the price is going down very close to $1. If this project goes long term, we'll see it go down even below $1 temporarily. There will come a time when the Treasury has to buy back. I mean, that is expected. That should happen. When they start burning Ohm tokens because, say, price gets down to 95 cents per Ohm, and that effectively gets the price back over $1, I can tell you right now, that means that this project is going to be a raving success, a raving success. Is the APY going to stay at 7,000%? Can it stay at 7,000%? Long term, the answer is no, it can't. But the DAO team, the Olympus team already knows this. They're already expecting to drop the APY all the way down to 1,000. The Olympus team already knows this. They're already planning, they've already said it publicly, that when the circulating supply gets to 10 million tokens, right now the circulating supply is at 6.4 million. When it gets to 10 million tokens, which could be this month or next month, they're going to drop the APY down to about 1,000% APY. They've already said that. So 7,000% is not sustainable. They know that as well. Originally, this was all about attracting people to the project. But now this project is in a very good place where they're starting to transition into a longer term project. A year from now, Olympus will look very, very different than it does today. So there's a common belief out there. It was in one of my comments, and that belief says it doesn't matter what the price does. It doesn't matter what the price does, because as long as you keep them staked, the APY is going to ultimately allow you to compound faster than the price drops. Is that actually true? Let's look at some math based on Olympus's own documentation. So they said right here in the frequently asked questions, why does the price of Ohm become irrelevant in the long term? Now the question is, how long of a term are we talking about? They use the example of a year. They say your Ohm balance will grow exponentially over time thanks to the power of compounding. Let's say you buy an Ohm for $400 now, and the market decides that in 1 year, the intrinsic value of Ohm will be $2. Assuming a daily compound interest rate of 2%, your balance would grow to 1,377 Ohm by the end of the year, which is worth, if each Ohm is worth $2, that would be $2,754. That is a cool $2,354 profit. By now, you should understand that you are paying a premium for Ohm now in exchange for a long-term benefit. Thus, you should have a long time horizon to allow your Ohm balances to grow exponentially and make this a worthwhile investment. So first things first here, they tell you that they expect the price to drop. They say, they use the example of dropping down to $2. They're assuming that Ohm is going to earn a daily interest rate of 2%, but it's not earning that now. Let me just quickly show you what they're saying based on their numbers. So they're saying you buy 1 Ohm, 2% daily interest rate for 1 year. If you calculate that out, compounded over the course of the entire year, you're going to get, that would be, it says dollars. We're talking about Ohm token. This is 1 Ohm, not $1. So they're saying 1,377 Ohm tokens. That's what they said right here at a $2 value. However, Let's look at Ohm right now. First of all, 1 ohm is about $600. So it would take $600 to get started to buy 1 ohm token. And let's look at the daily interest rate. So the APY is a compounded yield. There's yield and there's rate. APR is the rate. What are you earning every single day compounded? So you can find a calculator, APR to APY. You can look it up. 7,000% APY compounding daily is the same thing as 429% APR. You take the APR, the rate, and you say 429.73 divided by 365. So it's 1.17% a day, not 2%. So same calculation, 1 ohm at 1.17%. This is what we're currently earning now, and the APY seems to be dropping, and we know it's going to go all the way down to 1,000. The APY is eventually going to go down to 1,000. If you're curious, that's 240% APR a day. That's a good bit less than 1% a day, which is still a good APR, by the way. But they're going to take it down to 1,000. And that's all part of this transition to creating a reserve asset. Eventually, the APY will probably just be whatever's in line with market demand, which will be significantly lower, I predict. However, let's see where we're at. Right now, 1 ohm is $600, currently getting 1.17% per day compounded. Calculate that out. 69 ohm. Well, if you spend $600 to get 1 ohm, and even if they're worth $2, I think they're going to be less than $2 eventually. But if they go all the way down to $2, you're only at $140. You have lost. Now you're going to have to hold these ohms significantly longer if the price continues to go down at the rate that it's going down right now. Now, if you wanted to hold it longer, you could. But here's my thing. I personally don't believe that ohm is a great investment in the short to medium term. I'm planning to buy back into ohm as the price ultimately stabilizes, as the APY goes down, because when this APY is about to drop to it's about to drop down here to 1,000% APY. I don't even want to have to look at what that would be. 240%. Let's grab a calculator really quickly. Clear. 240 divided by 365. That's 0.65% per day. So if you come over here and let's just say from now till let's say 60 days. You're going to compound for 60 days at the current rate. Your 1 ohm, 60 days. That's the current rate. So your 1 ohm is going to become 2. Now they're going to drop down to, let's say by February, they drop down to we'll round up, we'll say 0.66%. 0.66%. 1 year. That's 22 ohm. That's February 2023. 2 years. 243 ohm. If they're valued at $2 each, you still have not got to your break-even point. So I hope this has made it clear. Long term, I think this project is going to be great, because what it's really designed to be is a crypto savings account. It's designed to be an asset that you can buy, you can store value in, and you know that the purchasing power is going to stay ahead of the dollar. That is the ultimate goal of the project. I think it's very neat for that purpose, and I think the use case for this project long term is going to be staggering. So what am I doing in the short term to medium term? So let me just answer 3 questions. Is the price going to stay the same? No, it's going to drop. Is the APY going to stay the same? Is it sustainable? No, the APY is not sustainable and price is not sustainable. Is the project sustainable? If you mean, is the project going to continue to allow people to get extremely wealthy? The answer to that is no, I don't believe so. Is the project going to succeed? Not financial advice, but my hope is yes. This is going to be revolutionary. Ultimately, in the short term to medium term, I'm earning passive income from so many different places. I'm going to tell you a project that I have done very well with, and I have not discussed it on my channel hardly at all. And I'm going to explain why, what the project is, and I've done so crazy well this past year. I'm going to start talking about it a lot more on my channel. I'll do that. I'll talk about that in my next video. So be sure to smash that subscribe button if you haven't done so already. And smash that like button if you want someone who's going to break down their thought process for you. So long term, in the short term to medium term, I'm investing in other cryptocurrency passive vehicles. And I plan to take some of those profits My long-term hodl bag right now is like Bitcoin, Ethereum, and a couple of other cryptos that are just long-term. I never plan to sell. Well, guess what? I plan to put a portion of that into Olympus DAO eventually if the project continues to succeed. When they get down to a much more reasonable APY and the price really stabilizes down there really close to a dollar or two, probably. I plan to get in this thing and just hold on to it because I think that this project is going to be a great way to protect your long-term buying power of your cryptocurrency in all market conditions. Even, I think this is a type of project that truly could lead to mass adoption for crypto throughout the world. But it's not, in my opinion, now's not the time to be in the project for that massive wealth creation machine. There's far, far better projects for that, in my personal opinion. Now, before you go there and say, what about Climate DAO and this DAO and that DAO and this DAO? If they're not backed by hard assets that should maintain some sort of price, and if they don't have a treasury, the reason that you see this trending up, the risk-free value, is because they, for lack of better terms, their treasury will always gain more crypto. And if you don't understand that, I can save that for another video. And thank you so much for watching. And if you want to find out what are some of the other projects that I'm currently investing in, be sure to subscribe to the channel. If you've got any comments, put them down in the comments. Thank you so much. Decentralized cryptocurrency equals freedom. And I believe that Olympus DAO could be part of that freedom in the long term. This is Crypto Wealth. I'm out.